Hello, this is Richard Wilson coming to you from Houston, Texas. I'm actually running an event here tomorrow for the Family Office Club, and I wanted to record a short video on the 5 different types of hedge fund investors that I see most commonly, investing and allocating into hedge funds. The first would be high net worth individuals. These would be angel investor types, people who might be worth $1 to $10 million, sometimes a little bit more, and they often do the least amount of due diligence, invest based on referral and personal relationships, and oftentimes the sales cycle with them can be the shortest, but it also can just naturally happen through friends and family, peers, from past colleagues at workplaces, for traders who go out on their own and start a fund, etc. The next type of investor is a family office investor. This could be a single family office that's very small. It could be a large billion-dollar plus single family office, or a multifamily office that serves dozens of ultra wealthy clients. And the family offices typically have more barriers in place before they make an allocation. They're typically going to conduct more due diligence and have more strenuous requirements, and might negotiate harder on fees. They might want a piece of your GP if they're going to invest early on as an LP and be a big part of your LP base. They might not want to be more than 10 or 15% of your total LP base. And they might really resist investing if you're a private equity fund until you're in fund 2, 3, or 4. Or if you're a hedge fund or other type of long-only fund, you might have to get to $30, $50 million in assets under management before they'll invest as a normal LP investor. Sometimes even $100 million plus, and you're still too small. Depends on the family office. Remember, there's 20,000 family offices or more globally. So there's a full spectrum of risk preferences and how early on someone will go into a manager. And it's the type of stuff we talk about at our Emerging Manager Investor Summit through the Family Office Club. The next type of investor that commonly goes into hedge funds would be an endowment fund. So these can be a local small endowment fund that might be in your own city, or it could be a very well-known billion-dollar plus endowment fund. One thing to know with endowment funds and the next investor type, pension funds, is that you really are sometimes going to be dealing with a committee decision. You're going to be dealing with multiple people that need to buy in on it, and sometimes you're going to deal with an investment consultant, an institutional investment consultant, who might have a mandate with that endowment fund. In other words, they're advising that endowment fund on their hedge fund investments. The difficulty there is that sometimes the investment consultant will have a discretionary mandate and they'll be making all the decisions. Other times they'll be non-discretionary and they're just giving opinions, but the endowment fund or pension fund makes the ultimate decision. Either way, you want to get on the good list of these institutional investment consultants, and they can be a great ally of yours if you win one over on working with you long term. The final type of hedge fund investor would be a fund to fund. It could be a real estate fund to fund, a long only fund to fund, a hedge fund to fund. But in any case, the fund to fund is typically trying to give somebody a diversified allocation to an industry, an area, or a type of asset class. One classic example is going into venture capital. You might not want to get unlucky choosing a VC fund that happens to have a bad run. So by diversifying over 7 or 9 different VC funds, or you might not want to choose one biotech hedge fund, allocating across 3 biotech hedge funds may or may not be a good decision, but the reason people go into it is either get into funds you couldn't get access to directly because the minimums are too high or they're quote-unquote closed to new investors, or it's to diversify your allocations into a space. So those are the 5 types of investors I wanted to cover today for hedge funds. It'd be fund to funds, family offices, high net worth investors, endowments, and pension funds. If you're a fund manager, I hope you got some value out of this video, and I hope to see you at one of our upcoming Family Office Club events. If you haven't yet, please check out familyoffices.com. Take care.